My name is Miranda Chook, a CPA. Income statements are one of the required financial statements that is required by generally accepted accounting principles. The main categories that you'll find on an income statement start at the top with revenues, or sometimes they're called sales, or in the case of banks, it's called net interest income. If there are other sources of revenue or sales, then you'll also see that listed. Then the next major category that you'll see on an income statement are the cost of sales or cost of goods sold, or net interest expense in the case of the bank. So again, these are the costs that are directly related to generating those revenues and sales that were in the previous category. The difference in these two line items is your gross margin, or in the case of banks, net interest margin. Following this major line item are other income and other expense. For example, in the case of banks, there may be other items that generate income, such as credit card fees that you would see in other income. After other income or expenses are deducted from the gross margin, then you will have what is commonly referred to as operating income, or income before taxes. Some companies like to show income before interest as well as taxes. Then after operating income and/or expense is deducted from gross margin, then you'll arrive at operating income. Some companies like to present this before interest and taxes, and some companies just present this before taxes. Then, of course, you'll have your provision for income taxes. Then you will arrive at net income. And then one other item that is required to be disclosed for public companies will be your earnings per share.